Good morning, everybody, and a huge welcome to Policy Exchange. I'm Matt Oakley. I head up Policy Exchange unit on economics and social policy. It's a really great pleasure to welcome you all here today. They're attracted by our stellar lineup of speakers. So, last time we had an event on tax here at Policy Exchange, I was slightly surprised that the panellists used the words sexy and exciting about the tax system. Clearly you're all watching that, or you've seen it since then, because you've all turned up, and it's a huge turnout, so thank you for coming along. So obviously the economy, business and growth are hugely important for the work of Policy Exchange, and it's kind of central to what we do. Yesterday we hosted a conference on the labour market, and it was clear from across the whole range of speakers that without growth, we aren't going to deliver jobs, security, the kind of living standards that we really want in the economy. And that means it's really essential that we support business in the UK and we help them grow. And nowhere is that truer than in the tax system. So a bit of background on Policy Exchange. In publications before the autumn statement last year and before the budget earlier this year, we published two major reports calling for quite significant changes to the tax system, and also changes in how the tax system is delivered in terms of policy formation. We argued that long-term plans must be set out by government to give greater clarity and certainty. We noted a particular problem for small firms where that's a huge problem, the uncertainty and constant changing of the tax system causes huge problems, and we outlined a system where we could write out the standard tax code and actually have a flat tax system for small business and startups to try and free them up to do what they do best, to innovate, to grow, to employ people, rather than constantly focusing on the changing tax system. So our focus has been on simplicity and on certainty, but we realise that with the tax system that's been built up over centuries, there's far more places where we might look. And that's why we're really pleased today to have John Cridland to lay out the CBI's plans for what some of those areas might be. So the plan is to get John to speak for around half an hour. We'll then invite our esteemed panel to make some short comments. Then we'll have a good bit of time at the end for some questions and answers from the floor. So please do hold on to your questions until the end. But without further ado, I'll invite John to the stage.
Well, thank you very much, Matt, for that introduction. Good morning, ladies and gentlemen. I'm sorry that we didn't predict the level of interest, and I do apologise to those of you standing at the back of the room. Tax doesn't have to be taxing. This probably seemed amusing wordplay when it was first dreamt up. But coming as it did from Her Majesty's Revenue and Customs, and in a country with one of the largest tax rule books in the world, I'm not quite sure who's laughing. Tax, and especially corporate tax, is complicated. Every fresh policy decision, however well-intentioned, throws up further complexity. So the picture of what business tax pays, what tax business pays, is increasingly complex. For people with straightforward earnings through PAYE, the amount of tax paid is fairly predictable. I think it's therefore a reasonable public assumption that the same is true of a company. But in a globalised economy, the reality is going to be much more complicated. And it's therefore a difficult matter of public debate simply by definition. Activist groups have raised the perfectly legitimate question of whether business pays its fair share of tax. I think it's a good question. I think it deserves a good answer. But it's not an easy answer to give, because what people see as fair lies in the eye of the beholder. I am, though, confident that the large majority of business in this country pays the right amount of tax, and that for the small minority which does not, times are getting tougher, not easier, and rightly so. As many of you know, I spend my working day talking to companies up and down the country. Frankly, I don't recognise the notion that Her Majesty's Revenue and Customs is a soft touch. Far from it. Tough, but fair. The reason I wanted to speak to you today is that for far too long, business has been slow and perhaps even reluctant to enter the public policy debate on tax policy. That needs to change. We want to defend robustly our record as business and, as you've said, advocate pro-growth tax policies which are in everybody's interests. We need to distinguish between legitimate, necessary tax management and, quite separately, abusive arrangements to avoid tax. Remembering that the majority of abusive schemes involve attempts, I think, by high net wealth individuals to minimise their tax burden rather than by corporate Britain. We've made the case for business in a new report, which is available at the back, imaginatively titled Tax and British Business Making the Case. In the aftermath of the budget, it seemed to me a good time to consider where we stand, where we need to head, and where we still need to clear up confusion. So today I'll take a few minutes just to give you a view of how important it is that the UK has an internationally competitive tax system that can attract talent, encourage entrepreneurial spirit, and reward success. I'll set out what I believe to be the true picture of what British business, large and small, pays in tax, and I'll try and answer some of the very reasonable and legitimate questions which are raised about how business manages its taxes. And I want to ensure you're left with the indelible impression that evasive or abusive arrangements are not and never will be tolerated by responsible business or by the CBI. In a period of necessary fiscal austerity, it's important that those who still can contribute to the public finances pay the taxes they're obliged to. This obligation isn't just a legal one, it's a social one too. Business depends on a healthy, educated workforce that feels safe and secure at home and at work. We cannot have this unless we have effective, properly funded public services. But this cuts both ways. An effective state sector cannot exist without a healthy, motivated business sector, and one rightly recognised and valued as the wealth creator and the chief source of British employment. So businesses, just like individuals, need to pay their taxes, but we also need a tax system that's fair and which can be an asset to our country, not a liability. And here's the nub of the argument. Perhaps no commentary on tax is complete without the salutary words of Louis XIV's finance minister, Jean-Baptiste Colbert. He said, quote, "The art of taxation consists in so plucking the goose," and I won't do the French accent, "as to obtain the largest amount of feathers with the least amount of hissing." The CBI is quite good at hissing, at least on a good day. In the last decade, the British goose was most certainly hissing, and for good reason. The prospects for investment in the British economy were being damaged by a loss of corporate tax competitiveness. Now, thankfully, action is now being taken. The coalition government is committed to creating the most competitive tax system in the G20. That might not always win it popularity prizes, but it could do more to secure lasting prosperity than many of the other levers that the coalition government could pull. Progress is being made on tax rates, on tax simplification, and on improvements to policy making. The Chancellor's decision in the budget to accelerate the reductions in corporation tax sends a powerful signal to companies to invest, to do business, and to create jobs in Britain. In an increasingly competitive world, such signals are essential. So as you know, by 2014, the UK headline rate of corporation tax will be the 4th lowest in the G20. That's good, and although I'll use a verb here we'll hear plenty of during the summer's Olympics, it still won't leave us medal. But in terms of effective tax rates, those which companies actually pay, we still need to do more. When viewed from an effective tax rate lens, we're still 6th in the G20 by 2014, and that presumes that other countries don't do any more, looking to our example. The CBI's long-term ambition for the headline corporation tax rate is 18%. And this isn't special pleading. It's a level-headed analysis of what the economic multiplier effects would be on a dynamic basis. In other words, the impact taxes actually have on the ground and on people's lives. Pound for pound, the economic impact of reducing corporation tax far exceeds increasing personal allowances, cutting VAT, or raising government spending. It stimulates investment, which in turn leads to more long-term growth. More competitive tax rates encourage people to start businesses, grow existing operations, and bring or keep enterprise here. The long view is a revealing one. 30 years ago, the main rate of corporation tax was 52%, and it yielded tax revenues equivalent to 2% of GDP. In the last year, with a corporation tax rate of 26%, half what it was 30 years ago. Corporation tax will yield 2.8% of GDP, almost half as much again as where we started with a rate twice as high. For all that the CBI favours the competitive gains of lower taxation, companies completely accept that paying tax is part of doing business. It gives them their broader licence to operate, frankly the most important licence that any business has. It enables them to play a full role in society and be recognised for doing it. Yet to read the comments and claims of some, you would think that business spends its time doing everything it can to dodge all and every tax it owes. The facts, to me, show how far from the truth this is. In the last financial year, for which we have full figures, businesses operating in the UK paid around 163 billion of taxes, or around a quarter of total government revenue, made up of employers' national insurance, corporation tax, business rates, a share of fuel duties and other taxes, including importantly environmental ones. And on top of that 163 billion, we collect taxes too, such as income tax through PAYE and VAT on sales, at a significant administrative cost to business. The business tax burden clearly doesn't fall uniformly across all businesses. That's why it's such a difficult story to tell. Many business taxes are targeted towards a certain sector or a certain type of business, and different sectors have differing levels of profitability, typical size of company, and availability of legitimate deductions or reliefs. What we can say is, overall, the largest 1% of companies in Britain pay 81% of all corporation tax. Indeed, at the other end of the scale, 60% of small firms pay no corporation tax at all. But should we expect small firms as a whole to be paying corporation tax? Many small firms in their early years are clearly not profitable, and for many others, their main tax contribution will be through business rates, NI, dividends or income tax. For all the inevitable unevenness, what's clear is business as a whole pays its way. That level of contribution is in excess of the equivalent level of contribution of French business, German business or American business. Moreover, having the right tax environment underpins economic growth. So looking beyond the definition of what is or is not fair, governments have an obligation to understand what happens in practice and on the ground. Now, businesses have to contend with the sheer complexity of the tax system. The overwhelming majority do their level best to achieve this, complying with the massive number of rules regarding tax and regulation. Doing this and making use of the tax reliefs that government make available to them and encourage them to use, things like the R&D tax credit, that's what we call tax management. It's an important and legitimate function of the business world. For the tax system to be healthy, And for the public to have confidence in it, it's essential that tax management is clearly distinguished from illegal tax evasion, which by definition is illegal, and actually, more importantly, that it's clearly distinguished from abusive avoidance schemes, which may not be technically illegal, but isn't something business should do, and certainly isn't something the CBI supports. It's a dangerous, if sometimes convenient myth some people peddle that all tax management is abusive and amounts to evasion. It simply doesn't. Almost all businesses pay the taxes they believe they owe and have absolutely no desire or intention to defraud the system. They know it's wrong to do anything different, and they know that they won't ever and shouldn't ever get away with it. Tax evasion, that is not declaring taxable income due, is, as I've already said, illegal. It's also immoral, and it damages the integrity of honest businesses the country over. But there are also abusive tax arrangements, which, while technically just on the right side of the law, as I've said, are wholly artificial. They fulfill no commercial purpose other than to avoid tax. These do not fit within what we call in the CBI tax management. And it's welcome that the scope for such abusive arrangements has diminished drastically over the last decade. And I think this is part of the story that is little understood, even by some of our colleagues in Parliament. Reports about so-called sweetheart deals between business and HMRC are simply wide of the mark. The tax gap between what should be collected and what actually is collected has been shrinking in recent years. And only about 1.2 billion of that tax gap is attributable to corporation tax paid by the largest companies. Only 3.4% of the perceived gap. The tax gap itself, I think we would all accept, is a far from perfect measure, including as it does both hard numbers on known liabilities and soft numbers, which are just based on initial estimates of what HMRC has decided might be due. The gap does, of course, include abusive tax arrangements, but it also includes honest disagreements over interpretations of tax law. Determining taxable profits is not a precise science, and there will often, and in perfectly good faith, be differences in what a company believes it owes and what HMRC believes it owes. But despite this, settlements are reached, litigation is avoided, and common sense is allowed to prevail. HMRC's enhanced relationship with business in recent years is seen as a model of best practice around the world. When I'm around the world, they actually think we're getting it right, with other countries keen to adopt a similar approach. The settlement programme is a key part of our envied system, something that we mustn't forget. What doesn't happen is liability being waived by HMRC. Anyone who thinks that happens clearly hasn't dealt with the taxman recently. But equally, there must be recognition that while taxpayers, be we individuals or be they companies, should pay what they owe, they should not pay a penny more. Abusive arrangements are very different. The scope for these has reduced in part because of new reporting requirements, anti-abuse initiatives, and a more open, effective and less adversarial relationship between taxpayers and HMRC than I remember maybe in the middle of the last decade. And we've now seen proposals for a general anti-abuse rule, or as we know, the Gauke. Now some have claimed that this now doesn't have any teeth. On the contrary, the proposals look to me both proportionate and effective, focused as they should be. The key word here is focus on highly abusive, artificial avoidance schemes which serve no commercial purpose. These schemes should be weeded out, and I'm now convinced that the Gauke could play an important role in doing so. It's for these reasons that after an early period of some scepticism, the CBI is now supportive, in principle, of the Gauke, a sign, I hope, you would agree that business is taking its responsibility on these issues seriously. Nonetheless, legitimate questions remain about certain aspects of the corporate tax system and how some businesses choose to manage their affairs. There are a number of tax rules that I think lead to genuine misunderstanding and inaccurate assessments of the tax position of companies operating in the UK. And there are some concepts of international avoidance that attract particular criticism. I'll mention just three as I come to the closing part of my remarks. First, I want to make an important distinction between low tax jurisdictions and secrecy jurisdictions. Many countries have low headline tax rates and fully transparent tax regimes. Ireland and the Netherlands are two prime examples. These jurisdictions, just like our own, are competing for mobile capital and for intellectual property. Be dead up front with you here. I think that sort of competition is a good thing. The argument that tax competition is a zero-sum game in the short term is simply not borne out by the facts. Similarly, the argument that tax competition is a race to the bottom in the long term is not supported by the facts. And I strongly believe in the tax sovereignty of nations. A number of other factors also have to be recognised. First, UK business needs to be competitive on the world stage and are perfectly entitled to operate in low tax jurisdictions for legitimate business purposes. Examples include local trading activity in the country concerned, having international joint ventures with multiple investors around the world, or having operations acquired internationally that were located in those jurisdictions and which would be difficult and costly to move. So I'm a passionate defender of low tax jurisdictions. But with my principle of legitimate tax sovereignty goes an equally important principle of tax transparency. And this is where the tax havens argument gets difficult. UK business must, and already does, cooperate with international authorities and national governments to help stamp out illegal activity. We also recognise that the OECD has been doing much good work in recent years and topically to encourage intergovernment cooperation and the exchange of information. So we need to be clear what we mean by so-called tax havens. I do not consider a low tax regime with transparency a tax haven, but I do believe there must be full transparency between tax authorities in order to avoid inappropriate arrangements hiding behind tax secrecy. That's my first. My second is transfer pricing. As you know, this is when different divisions of a multinational business transact with each other. There are detailed OECD guidelines as to how this should work, and it's something the firms themselves take very seriously. That's why they employ highly skilled people, some of them in the room today, to handle it correctly. Often the biggest problem isn't under taxation, it's the prospect of double taxation. The transfer pricing of intangibles like intellectual property can really be challenging. And this is where I think the nub of some of the cutting edge parts of the tax debate are. Recently we've seen some major international firms who are rich in IP have questions asked about their transfer pricing arrangements. The law must evolve constantly. Sure, it keeps up with developments at the leading edge of the real economy, in business models, and provide clarity in cases like these. This requires international cooperation to create a system which gives certainty to business and is transparent as possible. My second issue. My third I've already touched on, but I want to come back to. My third and final issue is those so-called black box arrangements, where transactions are designed for no commercial purpose at all, but just, for example, to separate a tax benefit from economic income. These are completely artificial. For me, they're not acceptable, and for me, as the voice of business in Britain, they tarnish honest business activity. The GAR has an important role to play in stamping out such arrangements, as do the recently strengthened disclosure rules. But I've also made clear that businesses are increasingly aware of the reputational risks associated with these schemes. This, combined with an improved relationship with HMRC, has drastically reduced the appetite for black box arrangements in recent years, and rightly so. So to conclude, I would say above all that more needs to be said about how much tax business pays. Business pays the tax it's required to, and we're talking about a huge amount of money in both cash terms and as a proportion of total government revenue. In those few cases where firms do not pay their way, and where this is not misunderstanding due to the complexity of the tax system or honest disagreement with HMRC, then clearly this must end. The positive aspect to all this should be greater recognition of the role a competitive tax system can play as an asset to the UK economy and not as a burden. Business wants to be, and predominantly is, responsible. But there's also a responsibility on government to give us the conditions in which we can compete and thrive. An attractive tax jurisdiction is part of this. When the historian, Adam Hart Davis, stopped being the voice behind tax doesn't have to be taxing, he told an interviewer something quite telling. He said, "I wish tax was simpler." I think we all agree. Complexity breeds many things, including confusion and distrust. It's time this changed, and the simple truth came out. Business does and will always pay its way. Thank you very much.
John, thank you. It's a huge amount of thoughts there for us all to think about, and hopefully our esteemed panel to make some comments. I know there's some challenges there for David, so perhaps the panel can come and join us. This is where I do my kind of shifting to the right of your left act as we make space on the on our limited stage. So on my left, I'm sure you all recognise David Gauke, MP, Exchequer Secretary to Treasury, then John Bartlett, Group Head of Tax VP, Vanessa Houlder, Economics Correspondent at the Financial Times, John Whiting, Tax Policy Director at the Chartered Institute of Taxation, and last but not least, Will Morris, Director of Global Tax Policy at GE. I think we're going to kick off with comments from David. I think the rules are about 5 minutes each, and I will be tough.
Right, okay. Well, first of all, I think it was excellent speech. Delighted to hear the argument that John was making there. Can I make a confession to begin with, which was a failure on my part about 16 years ago. I attended a hustings in constituency I was living in London, where there was prominent left-wing Labour MP, and he was making an argument. He said, yeah, the problem in this country, we undertax companies and we overtax individuals, and we should tax companies much more, and that's how we can afford more public spending and so on. And I listened to that argument, and I knew it was wrong, I knew there were weaknesses in it, but I couldn't quite put my finger on it. And it struck me that this was an argument that could be very popular. It was an argument that the public could well respond to. And perhaps now, in difficult times, when we're having to make very difficult decisions on the public finances, there's an even greater appetite for those that would say, if only we tax companies more one way or the other, all our problems would be solved. By the way, the prominent left-wing Labour MP who was advocating taxing individuals less and companies more was Ken Livingstone. I think you understood his arguments to some extent. The difficulty, the challenge is there's a number. The first point to make is that, ultimately, all taxes are borne by individuals and households one way or the other. Whether it's shareholders, whether it's employees, whether it's the consumer, ultimately real people bear the burden. And John's absolutely right to say that businesses bear a burden. Ultimately, it will be their shareholders or employees or customers, as well as, of course, businesses write huge checks. They do collect. Now, that is not an argument for scrapping corporation tax, as some people advocate. There are very good practical reasons for corporation tax. But the first point to make is that the idea that there is some sort of anonymous entity out there floating around and that you can get as much money as you like out of them without it ever really having an impact on anybody you ever meet is completely nonsensical. It's an argument that we often hear in the context of financial transaction tax. Again, ultimately, somebody real will pay that tax, and any argument in this field that sounds too good to be true is too good to be true. The second point is that it's very, very important to be competitive. Businesses can choose where they invest. Wealthy individuals can choose where they live and work. And it is vital for any sensible government that is wanting the UK economy to grow to put in place as competitive an environment as possible. And I think in the environment that we are in, with a large deficit, this government has taken some very brave steps in, as we've heard, reducing corporation tax very substantially. We inherited it at 28%, 22% by 2014, within touching distance of 20%, and then one can add on top of that all the reforms we're making to control foreign companies, to the patent box, to things like enterprise investment schemes and so on, and just the way in which we make tax law a more consultative and deliberative approach. All of those things, I think, add to our competitiveness. And not to be ignored in this, I'm pleased that John touched on this issue, is the administration of tax. Now, this is a clearly very controversial issue. Allegations get thrown around about HMRC and sweetheart deals and so on. As far as I can see, on the basis of little evidence, I have to say I find a divide in life between those people who I meet who have technical knowledge of tax, who tend to say that most of these allegations are clearly nonsense, and those who don't have a close understanding, who very often tend to believe whatever the wildest allegation is. Now, on some of these cases, Andrew Park is looking at this. We'll see what he says, and he's being presented with the evidence. But I have to say, I've not been persuaded by some of the wild claims that are made about what has happened. But let us see on that. But I suppose to stick to the timings, I think the main point that I want to make is that there is a populist argument that says you can always tax businesses more, that they're all getting away with it, not paying their fair share. And I think it is very important for those people who believe that we have a competitive tax, we should have a competitive tax environment in the UK, that we have to have a pro-business environment to actually make the case of what businesses do, to identify those who are not behaving appropriately, to take resolute action against those who are not paying their fair share. But for those businesses that are making a contribution, aren't paying the taxes that the law requires them to pay, for them to get out there and argue why it's important that we welcome those businesses, that we shouldn't fall for some of the populist rhetoric that we hear, and that we all work together in ensuring that we have a country where businesses choose to locate, choose to invest and pay their taxes. That is good for the Exchequer, it is good for growth, it is good for business, it's good for the country, and that's exactly what the government is trying to do, and I'm delighted that the CBI are engaging in this debate so fully, so that we have a better chance of delivering on that agenda.
Thank you very much. Superbly to time. I think we're going to scoot over to John Whiting second.
Thank you. And to start off with a couple of comments from Chartered Institute of Taxation point of view, I think we go along very much with a lot of the points John was making, things like the need for clearer rules on tax that people can understand and follow. And interesting, of course, you pick up on the general anti-abuse rule, got to be careful on that one, which we think has a lot of potential for tackling the real abuses, providing, of course, it gets over the hurdle of, as it were, meeting the first thing I've just said, which is clear rules, and we know where we are. But, of course, one of the things you threw out, John, was the need for simplification. So if I may, I'll take my CAOT hat off and put the other one on that, as many of you know I have, available at a drop of a hat, as it were, which is Director of Office of Tax Simplification. And perhaps just give you a few comments from that point of view. And I was struck listening to the budget, as I'm sure everybody in the room did, that the Chancellor did of course refer to Adam Smith in the budget and some of his principles. The one he didn't mention was that Smith called for easy taxes, part of the marker for the need towards civilization. Now, before any of you think that I'm going to campaign for all taxes to be devolved to a certain well-known airline and similar, and we get orange tax returns, the point is, of course, that it should be that taxes should become easier to deal with. And that, in many ways, is what the OTS is all about. You may say, okay, why should we simplify taxes? Hopefully it's self-evident, cutting the time it takes to deal with them, cut the errors, cut the worries that all sides have. And of course with this I mean business, individuals, advisors and HMRC. Tax, yes, I'm afraid I do think tax has to be taxing because that's kind of the point. You do have to pay money, but it should be relatively easy to deal with. And that's the OTS objective, to cut down, if we can, the famously long tax code that, all right, it is the longest in the world, but by OTS analysis, we actually showed it probably is only about half the length many people think it is, and it's to David's credit that the government hasn't immediately claimed credit for cutting the tax code in half.
Still time, John.
Still time. Well, when you've got a bad moment, you've got that one in your pocket. In all seriousness, a major part of our work at the OTS so far has been on business taxes. Mainly small business, but of course anything really on business taxes has resonances all over the size range. And it's instructive to reflect on the three key difficulties we found business saying. One, the amount of change. Change causes complexity, causes difficulty. We've got a challenge to have less change, or of course, if we have change, it must be consulted on, taken through carefully and steadily, so people have got a chance to get used to it. The government's tax policy making is clearly a good start, and there's many good examples. I don't want to say there's one or two less good ones as well. Second thing, PAYE national insurance, a big issue for so many businesses, the difficulties it causes dealing with both. Again, that is being taken forward. It's good that the OTS's recommendations are being taken forward. And the third thing we found, and these were the top three from business in this batting order, was HMRC admin, how HMRC deals with businesses, particularly small, but also large. And perhaps the crying need there was ways of getting more certainty, easier certainty, closure in businesses' affairs, so that they can deal with tax and move on and do what they want to, which is being in business. Again, very good that our recommendations are being picked up and taken forward, together with some ideas for alternative systems, cash bases, which are really quite brave and radical, and I think have a lot of potential. The last area that I'll just mention is, of course, we've looked also at share schemes, and we'll continue to look at that. I was very struck at a meeting that I've just been to, together with Jeremy Sherwood, my head of office, earlier today, with some smaller quoted company representatives. And we talked about share schemes, and there's a number of people there who said, well, companies, yes, they're good ideas, and of course they play to the government's enterprise agenda, but we don't use them because they're too difficult and they're too involved. Well, that's quite a challenge. Hopefully we can simplify them, because if we go back to it, tax maybe does have to be taxing, but using release, using incentives, freeing up business to do what it does best, incentivizing employees with this anecdote, shouldn't be as taxing as it is. So hopefully the OTS can make a difference, and as I say, we welcome thoughts from anybody here. So I'll pause at that.
Hold on to this also for a little bit longer. Vanessa.
I just wanted to pick up on what David said about popular rhetoric. And there is a lot more heat and light in the debate on corporate tax at the moment. But I think it's worth looking at why these arguments are resonating so much. It's not just Occupy and UK Uncut. The arguments have really become much more mainstream over the last year. Looking in the Daily Mail this week, Max Hastings had a broadside on what he called the pathetically low levels of tax being paid by the very rich and companies. He said it's not the politics of envy, it's the economics of justice. TUC puts out a press release today. It's comparing corporate tax paying to pasty eaters and saying that you pay a higher level of tax if you buy a pasty than you do if you're a company. Unions are very important players in this debate, partly because they've got a very broad membership, and also because of the way the arguments about cuts is evolving. There is an argument that if only companies and the rich would pay their share, then we wouldn't need to have the cuts that we're having. And it doesn't stand up to much scrutiny, but I think it is quite a resonating argument. You could say that all this is a good thing. As John said, companies are aware of reputational risk on tax in a way that I really don't think they were 5 years ago. When UK Uncut started, certainly I know at least one retailer which put out an edict that they were not to do anything that could put them in the public eye. And it's hard to argue that's a bad thing, but there is a big downside on this. It's quite worrying in terms of morale. If there's a perception that the rich and powerful can get away with these abuses unchecked, it rather undermines the kind of culture of compliance that by and large we have in this country. And it's also terrifically damaging to the reputation of big companies. As John said, it's only a minority, a small minority, that aggressively avoid tax. But there is a lot of being tarred with the same brush. The day that the CBI launched its initiative on tax and business was a day when it emerged that Barclays had engaged in some quite aggressive tax schemes. And it does make a big difference to the debate. It's not everybody. I think this issue is very much focused on big business, and not just from the likes of UK Uncut. If you talk to politicians, even conservative politicians, there's quite a lot of antagonism there on the part of some towards big business and their relationship with government. It's the kind of David Davis crony capitalism debate. The controversy that David mentioned with HMRC and allegations of sweetheart deal played into that. I'd agree, I don't think there's much evidence to back that, but it has fed into this debate. One of the problems we've had is that individual companies really are not engaging in this. And that's true even if they're in the public eye. It's true if they're not in the public eye and actually feel they have a good story to tell. There was one tax director who said, no such thing as a good tax, no such thing as a good tax story. And I think that's very widely shared. It's left people like John to make the debate, also the tax advisory firms, but it's very hard. PwC, John's old firm, puts together a total tax contribution index, and it doesn't cut much eyesight time. People think you're pulling a fast one if you lump in the payroll taxes collected by companies along with corporate tax. Even if you just focus on corporate tax, it's still not seen as a very convincing argument by the critics. The latest PwC figures showed quite a sharp increase. And the UK Uncut's response, well, we know business is big. This just demonstrates how much it profits off monopolies and government subsidies. So there's no win there. If you're going to win this argument, business is going to win this argument, it's got to be a story about jobs, it's got to be a story about investment, it's got to be a story about growth. And the difficulty is that it's not a great story just at the moment. George Osborne's gone out and limped to create a business-friendly climate. The worry is that there's not going to be an immediate return. Richard Lambert, John's predecessor, wrote a depressing article in the FT after the budget saying, how wonderful these business-friendly tax changes were, but given the lack of demand, companies don't see an incentive to invest. So I think we are seeing a backlash. I think it's going to continue. We're going to have definitely pressure, as John said, in some quarters, for it to be tough and dark. I think transparency is another issue. The Public Accounts Committee last year said it thought there was less justification for taxpayer confidentiality for companies than there was for individuals. We're seeing clamour for certain MPs to become more transparent about their tax affairs. You kind of feel this issue is the one that's going to run a bit. We know companies don't want it. It certainly wouldn't enhance business in the UK's reputation for business friendliness. But when it comes to explaining why, it's put in quite vague terms about confidentiality, competitors wanting to get information. I think business needs to make a more convincing case on why it shouldn't be more transparent, if indeed it feels it can justify that. So just to sum up, I think this has been quite a one-sided debate up to now. I would actually share what's been said earlier about MPs, the media, quite a UK Uncut, and not really understanding the issues. But I think there's enough in there to make this a debate that's going to run until we get more transparency from companies and until the austerity and low growth era kind of goes away.
Thank you very much. Will?
Thank you very much. Obviously, I do work for a large company. I think the first thing that I would start off by saying is that all of us, the thing that we do is try to create growth. We try to create jobs. We try to produce things that people want. And even though we're a large multinational spread across over 100 countries, the UK and other places are very important places for us to do business. And we want to create jobs here. So I would emphasize that. Sometimes I get lost in the conversation that it's all about tax. But actually the first thing we do is create growth. That's what we want to do. We all have an interest in creating growth. And that's why I've been very glad to be working on this. As part of that, as John said, we do need a competitive tax system. And I would take my hat off to not just to David and to this government, but also to the last government which started this going, which is the realization that actually, in a world where borders are beginning to crumble, while you need to protect your own tax base, you also need to acknowledge this facet of globalization, which is that capital is now very mobile. And that's not to say that you should give capital everything that it wants, but it is to say that you should, that you need to bear that in mind. And therefore, what the government has been doing in terms of the CFC regime, I know that's been criticised, what they've been doing in terms of other elements of international taxation is very important, because that takes account of the world that we live in and of the need, in order to bring jobs to this country, to bring growth to this country, to have a tax system which works. That said, I agree with everything that both John said and that Vanessa said about this being proportionate and about business doing its part as well. In addition to being a GE, I've been chair of the CBI Tax Committee now for a year and a half. And one of the key things that I've tried to do during that period is to get business to make the case. There are undoubtedly, as John said, questions which need to be answered. There's no question about that. But at the same time, if business doesn't make its case, then it's going to be a one-sided debate. And there is a case to be made. Business does pay tax. Business does produce jobs. But going beyond that, a lot has changed in the past 10 or 15 years. And one of the reasons, we've all spent a lot of time producing this report, and I really would encourage you to look at it. A number of the points have already been touched on. Things have changed from the government's point of view in the past 10 years. It's not just the enhanced relationship, which, as David said, has come in for criticism, but actually if you go and talk to other tax authorities, they want to know what the recipe for the secret sauce is. I mean, how do you get, if you focus on the 1% of large taxpayers who pay 81% of corporate tax, and you can do that in an efficient way, which increases the tax take and increases the speed that you get there, then other countries want to know how to do that. So there's that element, but also there's the disclosure of tax avoidance schemes. That has made a huge difference, because it means that even with things that you don't like, and Vanessa mentioned the Barclays things, Barclays did a transaction. It was a legal transaction. They reported it as they were required to under the DOTA scheme. The government had sight of that, before it essentially got off the ground, and they could decide what they were going to do with it. The system worked. The system actually worked. We've been talking about a GAR. The GAR that Graham Aronson has come up with has been criticised, but again, it draws an appropriate balance between trying to wall off those very abusive transactions right at the edge that John was talking about, while at the same time giving certainty in the middle to normal tax planning, which again is a critical part of a competitive tax system. So things have changed there. Things have definitely changed in the boardroom. And one of the reasons why they've changed in the boardroom is again because HMRC has gone in there and has spoken to people and has elevated tax up the agenda. So again, that's an achievement for HMRC. But there are also other things. We've talked about tax being taxing. I can also assure you after 25 years that tax is actually quite complicated. I'm trying to write a story about tax, and particularly the interaction between accounting and tax rules. Two sets of rules which are trying to do very different things can mean that numbers which appear to say one thing actually mean something else. So if you take nothing else away, I hope you'll take the whole book away. But if when you come to read it, you read nothing else, please look at chapter 4. It's just a couple of pages 14 and 15. You may need a wet towel to wrap around your head, you may not. But it's some of the confusions which can arise when you talk about this. It's the difference between cash and tax. It's the difficulties that can arise when you talk about provisioning. It talks about transfer pricing. It's hard to write a simple story on tax. It's very easy to come up with a simple soundbite, but it's hard to write a good story on tax. So I would just encourage you to look at this. Businesses do have difficulty about talking about this because, as Vanessa said, if one person pops their head above the parapet, they become the target. And that's why the CBI has taken the lead on dealing with this. But business does take its responsibilities very, very seriously. And I hope after you've read this, you'll realise that. Thank you.
Thank you very much. And last but not least, the final John.
Thank you. And I'll just make a couple of additional points, really, because most of the points have really been made. So like Will, I work for a large company, headquartered in the UK, focused on providing investment jobs and energy for the UK. And it pains me, has pained me for several years to read about the loss of trust, I think, of the public in assuming that big businesses are avoiding tax most of the time. It's simply, I know that it simply isn't true. That's why I've worked with the CBI and to help produce this report. I think it's critical, actually, that big business now starts to articulate its contribution, be explicit about saying that tax evasion is illegal and unacceptable, and that it has no time for the artificial tax avoidance schemes, the black box schemes that John has described. The point, and I'm often asked, so how do you actually spend your time, running tax in a multinational? Most of the time is spent struggling with compliance and the complexity of, here in the UK, what is just about the largest set of legislation, the largest tax code in the world, enormously difficult to comply with it, and as John has demonstrated, with huge scope for simplification to come, I think. So that's the first point. So business does need to be better at articulating its contribution. The GAR, I was privileged to work with Graham Aronson on the GAR study, and I did so because I was offended by many of the schemes that I saw coming through. Schemes with no underlying business substance whatsoever, quite aggressive in anyone's language. And we decided early on, the GAR study group decided early on that the proposal needed to be tightly focused on the most abusive schemes if we were to protect the competitive edge that successive governments have been building for the UK's business community. And I think that the proposal does that, and I'm just hopeful that when we see the wording in June or so, that the government has stuck with that. And then finally, just a word on HMRC, and I'm just going to emphasise a couple of points. We talk about the enhanced relationship between big business and HMRC. I just want to say that isn't an easy relationship. I don't want anybody to think that is an easy relationship. It's a tough, pragmatic, proportionate basis that HMRC work on. And it's remarkable to go around the world and hear the credits given to HMRC in the way they conduct their affairs with big business. Now, John referred to this. HMRC have been very successful at getting into companies in the UK and changing attitudes in the boardroom towards tax avoidance and tax evasion. Incredibly successful over the last 10 years, and we give them some credit for that.
Thank you very much. I'll now ask John to come back onto the stage, and I think we'll open up to a Q&A. Before that, I'm going to be horrendously rude and ask the first question now. I was interested by what all you said, and I think you made some really good points about business needing to make their case better. And I think Vanessa highlighted very effectively, actually, the debate is actually a lot more widespread than perhaps we would think that business is potentially trying to avoid tax or what have you. My challenge is that I think kind of the cases kind of weren't here. I don't think there's many people in the room who are going to disagree with anything a lot of you have said. And so I'd like to kind of ask the panel what kind of concrete things we can do to, I guess, as a paraphrase, move the debate from the Financial Times, no offence, to the Daily Mail or the Sun, and actually get much more widespread readership. Actually, all people engage with this kind of idea that business is good and the business is doing the right thing. Perhaps you can start, John.
Well, one of the things I've tried to do in CBI over the last year is a bit more show and tell, because I think some of these debates can get overcomplicated. Do things in a slightly different way. I mean, to take an analogous example, beginning next week I'm headed off to Turkey with Trade Minister Lord Green. We're taking 30 mid-sized businesses to do a trade mission, which is about helping ordinary, main street, unknown companies get business in Turkey. We need to find routes to market for ideas. And I think we've tried, as Will said, with this report, not to get bogged down with the technical complexity of the tax system, but to show in a transparent way. And the challenge from Vanessa of transparency, I think there lies a lot of the answer for the CBI. The more we can show and tell, the more we build up credibility.
David, do you think there's a role for government here?
There is a role for government, but it can't be government alone, and that's been my argument for some months. And I think Vanessa is right that the argument is easier to make when businesses are growing, when the economy is in a stronger position than when it is when things are struggling to some extent. But I do think it is important that the argument isn't there by default, that there is only one side that is being heard. And I do see the difficulty for individual businesses to engage in this. But that's why I think it's absolutely right that the CBI are engaged. But equally, it is, if we want to have a pro-business environment in the UK, because that's what we need for growth, then of course government has got to make the case and indeed just to justify the policies that we're implementing. We do that all the time. But as I say, I don't think it can be just for government to make that argument.
Vanessa, any thoughts on concrete steps where we can try and tackle some of the issues you were talking about around no jobs, investment, no growth, and so it's very hard?
I think it's really echoing what's already been said. I think it's really important finance directors in particular start commenting more on tax, and I think it should be more transparent. I think the CBI getting involved is very good insofar as I said, I think this has been very one-sided and there's not really been anyone putting the other side of the debate. Talking to colleagues at The Guardian, they've experimenting with what sort of open source reporting, and they say, well, what we do is, this was in the context of tax, the question was, did they sift what they put up there? And they said, we're not making judgments, so if we get stuff in and people criticise that, we'll put it up there and we wait for other people to come in and put their side of the story. And so if you don't have anyone putting the business side of the story, kind of, it's not going to work. So I just think the CBI doing this is good, but we need individual companies to be more transparent and more vocal.
John?
I think one point is that there is no quick fix, there is no easy solution here. This is a long haul thing to raise the level of the debate about tax. The CBI, yes, excellent that they're taking forward, but this is your 5-year mission, John, to boldly go where a lot of others haven't gone. It's also something for government. Interestingly, listening to the new head of communications at HMRC doing a presentation last week, they've got the point that they need to play their part in raising the debate on tax and basically getting some of the good stories out, the amount of tax that, business pays that is paid, and trying to basically make people better informed. And I think an example of the way that we might begin to make a difference is, we've all got to play our part, but the government's ideas, David's in particular ideas, on more transparency about tax generally for individual tax statements. It's all part of just making the debate better informed, but it's not a quick fix. And Vanessa, it will fill the paper for years, so keep you going.
I think I'll take some questions from the floor, if that's okay. If you could say who you are, where you're from, and make sure you're asking a question, not just a statement, and we'll take them in bunches of batches of 3, if that's okay. There's one here, one there, and then one further towards the back. I think we've got a roving mic here, so.
Hello, I'm Charles Alexander, former collaborator with CBI on tax affairs. My question to John and the panel is connected with the dynamic analysis from the Treasury of taxation in the economy. Yesterday in the House of Commons, the argument was repeated by the Prime Minister that the justification for the cut in the headline rate of income tax was that it would generate more tax revenues for the government and help with the overall economy. I believe that the same argument can be made for corporation tax, and therefore my question is, does the Treasury yet have an analytical tool in place to take the overall taxation of business in the round, and not just the welcome reduction in headline rate of corporation tax, but all the taxes that John mentioned that are present in this report in the round, for a dynamic analysis of what the effect of cutting the tax burden on business as a whole would be on the economy and on the revenues of the government in its deficit cutting effort.
And then the one just behind you.
Salman Shaheen, International Tax Review. Everyone here on the panel seems to back the idea that businesses should be making their case more strongly, but would you not agree that surely the best way to make your case more strongly is to back country by country reporting? If you have nothing to hide, why hide?
Thank you very much. And the gentleman at the back.
Hi, my name is Martin Hisson. I work for the development agency ActionAid. I'm not going to talk about gift aid though today, so don't worry. The report is called Tax in British Business. Now obviously, some ways in which the British tax regime works also affect developing countries. That's what we're concerned about, because British businesses operate a lot in developing countries. Now I should say that as a development agency in ActionAid, we're unashamedly in favour of growth in developing countries. We think the private sector and foreign investment is an important way to build that growth. We recognise that developing countries face a challenge in balancing how much they want to try and gain tax revenue from foreign investors, while also maintaining an attractive tax environment. So we're not on that sort of just tax business as much as you can spectrum. However, I do think that there's some areas in which there is a real debate to be had in developing countries. Having spoken to quite a few tax officials in developing countries, people at the OECD who work in tax and development, I think there is genuinely a problem in developing countries with aggressive tax planning by multinational businesses, including British businesses. So I'm interested in the panel's thoughts on tax planning in developing countries where the tax regime and the tax administration is not so comprehensive as it is here and there. There is more latitude for companies to to exploit loopholes. And in particular, just today...
Two questions for discussing.
Another question. One of David's coalition partners has tabled an amendment which looks at the Control Foreign Companies Rules changes and asks for an assessment of the impact of those changes on developing countries in terms of the likelihood of increased tax avoidance. So I'm interested in all the panel's views on whether that would be a useful thing to do.
Okay, thank you. Perhaps I'll ask David first to talk about Treasury modelling capacity.
Right, okay. I'm almost inclined to put it back to you, I think. But, first of all, the dynamic effect. I mean, as far as the additional rate is concerned, there was a specific study that was done by HMRC. The modelling that they did turned out, and the conclusions they drew from that modelling was very consistent with the consensus on the academic view of the level of tax income elasticity for very high earners. And as a consequence, they reached the conclusion that the 50p rate was raising around slightly less than £1 billion, or possibly even nothing. And we ended up with a costing of just £100 million to reduce the 50p rate to 45p. My understanding of the fairly esoteric area of modelling is that to some extent the Treasury does not use an entirely static model, but it nonetheless is, if you like, fairly cautious when it comes to the impact that a tax cut can have on the general economy. They don't take into account the indirect effects of a particular tax cut in terms of additional yield. And it's interesting, talks about the 100 million on which is the cost in terms of direct tax. There's also an estimate that indirect tax will probably get in slightly more than 100 million, but we don't take that into account in the scorecard. The Chancellor has made it clear that we're very interested in exploring the dynamic models further, but there is also a balance that has to be struck between also being reasonably cautious. And we've had problems in the past where Treasury predictions have proven to be far too optimistic on all sorts of things. So there should always be an element of caution within the numbers that the Treasury, or these days the Office of Budget Responsibility, uses in numbers, and we don't want to be taking any gambles. Can I quickly pick up, if you like, the points relating to the developing world? I think on country-by-country reporting, I think to some extent the jury is still out on how effective that actually is. To what extent, what is the level of detail that needs to be provided before one can, in any effective way, hold companies to account, and at that level of detail, to what extent does that impose an administrative burden that may well be disproportionate? The OECD are looking at that, and obviously we're interested to see where that goes. Related matter of developing countries and CFCs, I think it's very difficult for the UK to make an assessment, in all honesty, about the overall impact in developing countries, because very often it's developing countries that have that information. We're not in a position to go over and demand to see all the information about their tax system and then make an assessment of what they should be doing. But I do think there is an important role for us as a developing country with a sophisticated tax system in helping developing countries develop their tax systems. And actually, on the subject of untold stories, HMRC have got a very good story to tell about the help that they provide a lot of developing countries, particularly in sub-Saharan Africa. And actually, I think HMRC should be doing more about telling that story. They have helped the likes of Rwanda and Uganda and others. And there are some quite startling numbers about the increase in revenue that has been brought in, to some extent, thanks to assistance HMRC and different have provided. This has been going on for a few years, and I'm very keen that we can encourage that, and very keen that some of that DFID budget goes there, because if you can give a developing country an effective tax system, then that is a huge advantage to them, and they become less dependent upon aid. So I'm sympathetic to the arguments of helping developing countries. The question is, what is practically the most useful thing that we can do? And from what I've seen, the most useful thing that we can do is by training up tax inspectors, by going out there, providing advice, assisting them there. And I'm very keen that HMRC continues that very good work.
John? I support what David was saying as well. So just dealing with the country-by-country reporting thing, for the extractive industries, that's coming anyway. We know that's coming through European regulation or US and US regulation. But the extractive industries have been clearly in favour of transparency of tax reporting now for 10 years or more with the Extractive Industries Transparency Initiative. And there is quite a lot of disclosure in this area anyway. You have to stand back and say, so what value is the information that we are reporting on the taxes that are being paid in these countries? And I think actually the better challenge is really, what are you doing to develop capacity in those countries? What, from the tax side of things, what are you doing to develop the capacity of the tax administrations in those countries? And David rightly points out that HMRC have done some great work. Business hasn't engaged with that. And I think Will and I think there's an opportunity now for business to engage with that here in the UK and say, what could we do better to actually build capacity in some of these regimes around the world? Because, Martin, I find tax evasion and avoidance in these really aggressive schemes offensive here. So I find it offensive in those countries as well. And I think the majority of business does as well.
I might take a couple more questions. There's a front and then gentleman just behind.
I think the GARS, Heather Self from McGregor's, a law firm, I think the GARS study group achieved an amazing degree of consensus with the report that they produced. But in recent weeks, there's been an awful lot of press comment about things being labelled as tax avoidance that many of us in the tax field would not consider to be avoidance. Paying interest, offsetting losses, possibly even making donations to charity. And that, for me, brings a fear that the eventual GAR proposals will be much wider and could constrain genuine business transactions. What does the panel think about that?
Just behind.
Thank you, Chris Bates, Lancers Public Affairs. Just going back to your comments, John, on low tax jurisdictions and the need to demonstrate transparency. I'd be interested in the panel's thoughts on sort of how you define transparency and what you'd expect of a low tax jurisdiction to be transparent.
Thank you. John, perhaps we can start with you.
Okay, I just briefly parachute back to the previous question, because the point Charles made about the dynamic tax models is hugely important. One of the ways we've begun to connect this debate about the fact that business pays taxes, it's in the interests of the citizen that business doesn't pay more tax than it should pay, and that tax competitiveness is the key to job creation. So I think of course the Treasury are rightly cautious, but the acceptance that the dynamic element of the tax model applied across all taxes is a valid question for business to raise as part of our representation to the government. I find healthy, because when Charles, you and I started on this some 5 years ago, we met with a lot of scepticism. Coming back then to the particular question, I think it would be really unhelpful if the consensus that's built up around the GAR was damaged. I think the whole point about the GAR and the reason business is now rallying behind it is not that we've ended up with a weak GAR, because we ended up with a targeted GAR, targeted on things that should no longer be happening. It shouldn't be a catch-all. And that for me is very important.
And the question behind?
Yeah, on the issue of transparency, CBI works very closely with the OECD, and the more I thought about what I was going to say this morning, tremendous work going on between tax authorities across the world in a way that simply wasn't true 5 years ago, to share appropriate information. And a whole range of techniques that different tax authorities use, whether it be withholding taxes or exempt payments or exit payments or whatever the particular proposal, to deal with the implications of people having activity in a different tax jurisdiction that may not seem appropriate in the first tax jurisdiction. I just think we've got to build on what works. I think we've got to drive forward. And I think the OECD, it's one of the main reasons the CBI supports the OECD, this tax work. The OECD is the place to make those arrangements ever more effective.
I can see you nodding. Well, do you have any?
I mean, I work quite closely with the OECD on behalf of the CBI, and this covers a number of areas. So what Martin was talking about in terms of development, for example, there is a tax and development task force which looks as part of its remit at country-by-country reporting, but also looks much more broadly at these domestic resource mobilisation issues. So the things that John Bartlett was talking about, in terms of being able to help developing country governments build up their tax authorities, build up their tax policy, and in fact, business is anxious to engage in that. When we had the first meeting of this task force in Paris over 2 years ago now, Stephen Timms was David's predecessor was still in post, and he pushed this very strongly. One of the things I said there in open confidence was, look, I have a lot of transfer pricing colleagues. They would be very happy to go and talk to developing country governments about how it is that we do our transfer pricing. We take it very seriously. There is a huge reputational risk. We don't want to get it wrong, and therefore we spend a lot of time on it. But we'd be prepared to try and explain how it is that we do that. And one of the reasons why we're anxious to do that is because actually we have an interest in these countries becoming stronger, in civil society growing, and in the market growing. I mean, it's in our self-interest. There is a perfect convergence there. It's actually why we want better, more stable, more reliable, and stronger tax systems in those countries. So that's one of the things that the OECD can do. But to another point, again, one of the things that Martin was talking about in relation to the CFC regime, and as John has said, the extractors are already covered off on this. And there is something which is, I think, special about the extractive industries in relation to developing countries. The other issue, however, and John touched on this in his speech, relates to intangibles. Now again, this is not something that one country can do something about, because there are competitiveness issues there. However, the OECD is perfectly placed to do something about that. There's no doubt that, as the world has globalized, tax laws have not kept up with that. The OECD is a very respected international standard setter. They are looking at the taxation of intangibles. And when they come up with something, this is something which can go across the piece so that there can be no argument about competitive disadvantage in one country or another. But it will, at the same time, hopefully deal with some of the issues which I think have been sort of fairly validly raised as needing answers. So, again, I would strongly echo the fact that international cooperation here is the way to go.
John Whiting, any quick comments here?
I just wanted to pick up on the Gauke point that Heather raised, which I think is very much a real issue. It's something CIOT put squarely in our list of concerns about the GAR, which is the targeting, absolutely right, but the GAR is not going to hit what a lot of the public think of as avoidance. And therefore the fear is, perhaps not immediately, but in 2 or 3 years' time, there could be a backlash, maybe from another government, that says this has not met some of the publicly expressed concerns, and therefore a lot of the safeguards that John and the team built into the package are suddenly taken away. The answer, dare I say, is almost back to one of the previous questions, which is we need to keep making the case and explaining what is going on, what it's to do, and of course that what the government, what the public perceives as avoidance isn't necessarily things that are perhaps as evil as they are portrayed.
Some more questions. There was a gentleman there in the blue, one at the front here, and one more anywhere? Just these two there. Gentleman's there.
Hi, my name is Ben. I'm calling from speaking from Wonga, one of the rare British tech success stories in this country, quite controversial, I know. I welcome some of the government's steps in terms of what they're doing to attract enterprise to this country, but I do feel we're still losing a race against doublers and Ireland more widely in terms of attracting Facebook, Google, Twitter, etc. To these shores. And what more do you think can be done to address that?
Thanks. Gentleman on the front row.
My name is Andy Soares. And I'm a freelance journalist. I write for a number of publications aimed at finance directors and CFOs. If I heard Mr. Cridland correctly at the beginning, I think he said that you were quite certain that business was paying the right amount of tax. I see actually on page 13 of the document it says there is no such thing as the right amount of tax. And apart from sort of making a cheap point, I think actually the real issue is actually extremely difficult to determine for any one company what is the right amount of tax. Barclays, I'm sure, thought that they were right with their scheme. 60, 70 retailers several years ago, I'm sure, thought that they were right with their VAT scheme involved credit card management subsidiaries. How are FD, CFOs, boards supposed to actually make a sensible evaluation without, before having gone through to actually, being prosecuted or having retrospective legislation? How are they actually supposed to make decisions about whether they are looking at sensible tax management or getting too close to the border of abuse?
Can I bring in Vanessa first? Because I'm conscious you've not answered asking the questions. Any thoughts?
Well, I think it's a fair point. This is a subjective area, but boy, you look at some things, particularly the things that come up in the courts, and you think they tried to do that. There are some things. It's almost like a smell test, and I think everyone who deals with tax has probably seen things that they really think are, just beyond the pale. But you're absolutely right. This has to be decided by law, and it's no good talking about paying a fair amount of tax, because that doesn't help you get to the actual bill you've got to get to. So the whole mechanism that's here in place already, the tribunals and everything else, ultimately have to decide these things.
John, any thoughts?
Yeah, a distinction I draw is a macro-micro distinction. What we're saying in the report about the right amount of tax is the question on the lips of many critics of business, which is if the corporation tax rate in a particular year, when we produced the report, was 26, now it's lower, why aren't companies paying 26? And the point in the report is there are many and various reasons why companies' actual tax rate is not the notional tax rate, and it's very difficult for anybody to see in advance what the right rate of tax is. That's one of the key parts of the report. Why did I therefore, moving to the macro level, speaking for UK PLC, say I judge that business is paying the right amount of tax in Britain? Because it's those international comparators. It's the percentage of GDP that is provided by business taxpayers in the UK in comparison with our international competitors. I think there is no compelling evidence that the total tax take of UK business is somehow lightweight compared to other economies. And that's the point that I was making about the right rate of tax. I just wanted to comment on colleague Wonga's very, very interesting question. And I think there are huge debates to be had between business and the political class in this country about the full implications of the knowledge economy. And I think the fact that some of the challenges to companies operating in the UK on tax are companies that are at the cutting edge of the knowledge economy is unsurprising. But equally, coming directly to your question, I think it's a two-way street. Some of the challenges for government in developing a growth strategy are how we help cutting-edge knowledge economy companies like yours move forward. And I think the reason why it's sometimes a challenge to your businesses, and the reason why it's an equally legitimate challenge to government, is this point about intangibles. We have rules, we have policies that predated the intangible world. The intangible world, as you know better than I, is changing those paradigms, and how we police it, but also how we facilitate it, is new territory. So my answer to your question, is a very general answer in the interest of time, would be I think we need to focus on what the real implications of intangibles are for the future of the British economy, and make sure that we grab more than our fair share of intangibles here in Britain.
I'm sure David wants that too, so...
Yeah, just very quickly, and without necessarily focusing on one particular sector or another, although I take the point that you're raising, it is very important that we're not complacent. John, you talked earlier about how we lost the competitive advantage and now we're recovering it. And there can be a tendency that that's everything's fine now, and we can relax it. So I think, globalised world, we have to be very restless about this. We constantly have to be looking at what we can do to make ourselves competitive. all I would argue, I think, is that at this stage, given the difficulties in the public finances, we've made remarkably good progress. And the sense I have when talking to businesses from overseas is that people look at the UK, and I don't think this is yet fed through into domestic opinion. I'm not sure there's a widespread realisation of that. But what's really the big story about the budget? It's actually not pasties. It is nor caravans, but it is a little bit more about that Economist front cover. The Britain's open for business. It is about how's this budget being reported around the world? It's being reported about taking steps to make us more competitive, about reducing the additional rate. It's about a further reduction in corporation tax. It's about implementing the patent box, reform of controlled foreign companies. It is a big signal that Britain is open for business and that we are doing things to make ourselves competitive. The important thing is we don't need to stop, job done. We don't need to worry about competitiveness again. That's the real, that is a real danger for the country, but it's not a danger for this country. And I think we constantly have to be striving to ensure that we get businesses choosing to locate here.
It's very positive there.
Can I just add to that? I said before that I think the government has done a great job in terms of reforming international taxation, but also in terms of reaching out to business. They have done a remarkable job, and the level of consultation which has gone on, and the interplay between, again, not in a cosy way, not in a sort of we'll give you this if you give us that, but actually so how can we work together to actually make this a place where businesses want to come and do more stuff and make more things and create more jobs and in the end create more revenue. The government has been remarkably open to that, and it's been over the course now the past 2 years. Again, as I said before, started before that, but really taking off in the past 2 years. This has been an amazing process, and I think the government deserves a huge amount of credit for doing that.
You're being far too nice today, I'm conscious of time.
I did VAT on caravans.
I'm conscious of time, so I don't think we've got more time for any more questions, but I do want to finish with a quick summing up from each of the panellists. We were quite mean to people a couple of weeks ago and asked them to do it Twitter style in 140 characters. I won't be that mean, but I will say 20 seconds. So perhaps we can start that end, and your thoughts on the one thing we should all take away and try and do in the next 6 months on this agenda.
Business needs to make its case. Nobody else is going to make business's case for it. This is a start. But I would encourage all of us in this room to continue this debate, but to make it a proper debate, not a one-sided one.
John?
Raise the level of debate and don't forget about simplification.
That probably was a Twitter quote, actually. So someone got one on. Go ahead. Vanessa?
It's very repetitive. I think companies should just be a lot more open and vocal about their tax affairs.
And that means addressing some of those really difficult questions that are actually very difficult to answer, like the transparency thing. Explicitly, what is expected? What do companies need to do? We need to face up to that and discuss that.
This country will only prosper if we pursue pro-business policies. We'll only be able to pursue pro-business policies if we've got a pro-business environment. We'll only have a pro-business environment if those pro-business arguments are being made, and all of us have got a role in doing that.
That's right.
On whether business is paying its fair share of tax, I think we are much misunderstood, but we've nobody to blame for ourselves, and today is the beginning of a fight back to say we're paying the right amount of tax, but the way to get the economy moving is lower tax rates that lead to more tax being paid.
And mine is that we should all employ the sniff test in tax, so I think it's a fantastic idea. All that remains for me to say is there's copies of the report at the back, please do read them. I think it's been a fantastic debate, and so I'd like to thank in the usual way all of our panel members.